my God, it's over. This bull market that's just getting started, we haven't even gotten to crypto fall. That doesn't happen till June. The halving is still yet to come. And we have one more explosion that was planned before tax season this year. There's one more selling wave that's coming. And people are gonna go, oh my God, it's over. No.
Yes! Hell yeah! Hey, come on, baby! Come on! Yes! Come on!
What's going on, guys? K-Dub here with another episode of Crypto Zombie. Welcome back to the channel. Hope you're having a great day today. Having a look at the Bitcoin price right here, you can see that we have broken out of this ascending channel. Now, is this full-on confirmation? Not officially yet. I mean, I would like to see, maybe just a quick retest of the top just to solidify the fact that this resistance has now become support. So there is the possibility of maybe having Bitcoin go down to about that $50,000 area possibly. But as we can see right here, we are still maintaining this parabola, and if in fact we are going to hold above the 0.618 Fibonacci, which we did get the retrace as we expected, right? We got the retest on the parabola. Well, if we zoom out over here, that level is sitting at around $57,812. Now, this level is pretty significant because as we had spoke about, when we hit $55,000, there's going to be a massive liquidation of a lot of these shorts, potentially at around $800 million worth, which is why we could be seeing a short squeeze at the moment. But there's a lot I want to talk about because there's something we've spoke about on this channel for a very long time. It was something we had anticipated, and we got some serious confirmation on that just today. In fact, this may potentially be some of the strongest evidence or the best argument for the fact of why the price of Bitcoin is probably going to continue to the upside and maybe even get more aggressive as the year continues, right? And something that, we've talked about is this feedback loop for Bitcoin, and it could start to intensify. And believe it or not, it could even have something as simple to do with MicroStrategy alone. That's right, Michael Saylor himself, with all the Bitcoin that they've been buying over these years, could have a lot to also do with this. And, there was some breaking news that came out, which maybe you could take as a short-term warning. I do want to let you guys know how that could affect the Bitcoin price in the short term, but still, any of these dips, again, as we've been talking about, are going to be these sort of buy the dip events, right? I don't think we're going into a bear or you're going to get these low levels, 20K, 25K, things like that. It just doesn't seem like it's possible. And, so again, warning, but there is a catch, obviously. And finally, something that you've all been asking me about is talking about some altcoins. I think at this point, we have enough excitement, we have enough engagement in the crypto space as a whole to probably start looking at some of these altcoins. So I am going to drop a few altcoins at the end of this video. Of course, not financial advice. This is just things that I'm looking at. So before we get into that, though, I do want to just let everybody know that MetaSignals has opened up 200 spots for their NFTs if you want to get that lifetime access. These are just a few of the calls that have just come out recently. They had this over on Polkadot, which you could see, we didn't quite get up to the top range, but we did hit target number 2, and it is holding steady there. One that did very, very well was AVAX. It actually came out of this area. You could have taken the profit there, or if you wanted to ride it a little bit longer, it went even higher than the target. And another one that did really phenomenal was EOS. I mean, you could see this thing just way blew past our target. So, obviously, if you guys are interested, they are opening that up again. This is for lifetime access, and it does increase 6% for every 100 sold. So currently right now it's about 1.59 ETH. If you guys are interested, definitely check that out. But we need to dive in and we need to talk about what's going on. And this is a tweet, which, by the way, if you guys are not following me over on X at this point, I have been very busy posting over there. One post specifically that went pretty viral for me. This got over 100,000 views. Sorry about it being a little bit blurry. But this is the big news, and this is what we knew was going to happen, right? A lot of these gold bugs are actually moving out of gold and into Bitcoin. You could see this inverse relationship, and you could see that they're actually dumping their gold for Bitcoin. According to Zero Hedge, since spot Bitcoin ETFs were launched, gold ETFs in aggregate have seen almost $2 billion in net outflows, while Bitcoin ETFs have seen net inflows of almost $4 billion. So we've seen $2 billion in outflows of gold ETFs and double the amount of inflows into Bitcoin ETFs. Now, does this mean this is all coming from, the gold holders selling? Well, obviously no, because if 2 billion out, 4 billion in. This is massive, guys. We are finally, and it's been hard with a lot of these traditional, gold bugs. They can't see the value in Bitcoin. And I think finally it's starting to come to fruition. And if we come over here and just have a simple look at what the CFO of Coinbase was talking about, you could see that they've basically been saying that they've had a phenomenal Q1 so far, and we're not even done yet.
We've seen crypto come up across the board, and it's largely been driven by the Bitcoin ETF excitement and then the momentum. So when we look at the ETF in particular, we've seen net $4 billion of inflows into Bitcoin ETFs. This makes it one of the fastest growing ETF categories that we've ever seen in the history of ETFs. It's now surpassed silver in terms of total size. We're the proud custodian now of 90% of total ETF crypto. And that's really benefited our platform directly. But what I would say is we've seen growth writ large across the space with this excitement. More people are now getting into crypto. People are excited about the asset class again. And we've seen growth in our advanced trading, as well as in the institutional platform, which really is supporting the Bitcoin ETFs. So it's been good for the industry, and we've seen that momentum carry through now into the first quarter.
So what's the warning that we're talking about? Well, it was a bit of breaking news, and Crypto Busy broke this and said that bankrupt crypto trading desk and lender Genesis has been approved to sell 1.6 billion in GBT shares. Okay, so obviously this could open up some more dumping from GBTC, which could suppress the price a little bit more. But the reason I'm not really worried about this is because Grayscale Bitcoin has pretty much been doing nothing but nonstop bleeding, nonstop outflows ever since the ETF launched. And yeah, we had that little bit of maybe sell the news event, but now we're sitting even higher than the launch day of the actual ETF. So again, if we do have these outflows, good, let them sell, let it get it done with, and then we will have an opportunity to accumulate at these cheaper levels before the inevitable continuation. Because remember, as I've been saying, when it comes to guys like BlackRock and Larry Fink, okay, there's all these conspiracies about the manipulation and they're going to dump the price. That is ridiculous. That is ridiculous. And as much of a conspiracy theorist as I am myself, that makes absolutely no sense. These guys pride themselves in being the largest asset manager on planet Earth. They don't want to launch an ETF, everybody gets involved, and then everyone starts losing their money. It's not a good look for them. They have a very, very big ego. Yes, they make money on fees, of course, but they want the appreciation of the assets as well. And now these ETFs officially have more than MicroStrategy, them combined, than MicroStrategy individually. So it's only going to get crazier from here. There's only going to be more of a liquidity crunch. There's only going to be less Bitcoin available, less than about 3 million roughly trading per day. A lot of them are in the hodlers' wallets. And this was also just in derivative exchanges report a spike in call options to buy Bitcoin at 60K to 80K. So they're already anticipating these potential price movements, and they're ready to continue to buy at these levels. So if we already have buyers ready to step in and buy, obviously at these lower dips, but also even between 60 and 80K, the idea of Bitcoin going to $100,000 this year, it's not that crazy. We're sitting above 50,000 right now. All we have to do to get to 100K is double. That's it. You just have to double where we're at right now. You don't have to 10x, you don't have to 5x, you just have to double it, right? Which is pretty freaking crazy when you think about how fast the price has moved over these past few weeks. And if you have a look over here, we had a Grayscale executive who was talking about potential inflows, with these firms who are collectively managing $8 trillion. And when you do the math, it's pretty insane to not be bullish on Bitcoin.
I'm anticipating that by the time we get to the end of 2025, we're talking 2 years, we're going to see total inflows of more than $150 billion. We're only at 5 right now.
And what is going to propel? That's a big claim. That's a big number. What's going to propel that?
It really isn't all that big when you do the simple arithmetic. Individual investment advisors, independents, those that are operating their own firms, collectively manage around $8 trillion in assets, and 3/4 of them in every industry survey done by DAC-FP as well as by Bitwise all show that 3/4 of advisors say that they're going to allocate to these ETFs and that their average allocation is going to be about 2.5% of assets. Do the arithmetic. $8 trillion times 77% times 2.5% is $150 billion worth of flows. And that's just independent advisors. It excludes the wirehouses, it excludes the regional broker-dealers, it excludes the institutional investors.
So like Crypto News Alerts broke that math down. If their average allocation is going to be about 2.5%, just do the math, right? 8 trillion times 77% times 2.5% is $150 billion worth of inflows. To put that into perspective, we've only seen 5. Only 5. He's talking about 150 billion, and yet Bitcoin managed to get over $50,000 already just on those inflows alone. The arithmetic, the math is insane. And yeah, it's definitely not the time to be getting bearish on Bitcoin. And like Eric Balchunas pointed out, I don't know if you guys heard about this, but he says US banks left off key Bitcoin ETF roles are pushing SEC to tweak guidance around holding digital assets. A bank trade GP coalition sent the SEC a letter asking them to exclude ETFs from the broad crypto umbrella. They want a piece of the action, and I don't blame them. So pretty much in a nutshell, what they're trying to do is the SEC, you know, they're holding their nose, you know, with the ETF. They're kind of like, oh, we had to do it, but we still don't approve of it, and all this other stuff. And what does this really mean? Well, what it's saying is that they're basically trying to make it more expensive. In a nutshell, they're trying to discourage the banks, right? And the banks are actually starting to push back. Now, the bankers are the ones that are supposed to hate Bitcoin, right? The banks are the ones that are supposed to not like Bitcoin. And yet they're the ones that are saying, hey, come on, guys, this isn't fair. And what that's sending the message is that even the banks are starting to FOMO into whether or not they need to be able to hold, you know, more Bitcoin on their balance sheets. And if you have a look at what Peter Thiel was talking about, he is the CEO of Marathon Digital. They're a Bitcoin mining facility. You know, the biggest question is, well, okay, but if the bankers start getting involved, and then we have all these ETFs, and then we have all these derivatives, and we have all these paper products, is that going to dilute the value of Bitcoin? Is it going to make the underlying asset less valuable because of all, you know, of the paper issuance, which you would think would be a negative thing? His response was actually quite surprising.
You know, I think Bitcoin has always been a market where you've had, you know, few people have been able to drive price, you know, because at the end of the day, there are really fewer than 3 million Bitcoin sitting on exchanges at any given time. So it's a fairly thinly traded market. The ETFs are bringing actually more liquidity to the market. So it's a very good thing. And if you look at Bitcoin volatility, over the past 10 years, it's steadily decreased. And so I think that this will eventually behave a bit like gold does. You don't see the gold miners, you know, fretting all the time. You know, you see all of these derivatives on gold that exist, and I think you're going to see all of those plus some things that we haven't even conceptualized yet happen with Bitcoin and other cryptos, which will only bring, again, more liquidity. And over time, I think what you're going to see is, because there's a finite amount of Bitcoin, and we've already mined roughly almost 20 million of the 21 million Bitcoin, you're in a situation where it's not like many other commodities or equities where people can just issue more stock, or you can mine more gold or pump more oil. There's only a finite amount of Bitcoin. And so as more people want to hold it, what ends up happening is it just drives the price up. And so people trying to manipulate the market, you know, when you start getting the bulk of Bitcoin being locked up in ETFs and long-term holders, you know, historically over the past year, over 60 to 70% of Bitcoin has been in long-term holders' hands, as opposed to traders. So what that does is that limited amount of liquidity on exchanges has been able to be used and drive volatility. But over time, what's going to happen is there's going to be a flood of liquidity in this market. And I think it'll be a very mature market, and it'll behave very much like gold does, but with still a bit more beta to it.
And the crazy news that had come out about MicroStrategy, just to piggyback on this, right? They're talking about basically now pivoting to become a Bitcoin only company because that's where they see the most value. Well, the interesting thing is, as they continue to accumulate, they in and of themselves are becoming sort of a quasi Bitcoin ETF, right? Because they have so much on their balance sheet. So if you're investing in, you know, MicroStrategy, you're kind of also investing in Bitcoin. And over here, like Joe Burnett had pointed out, once they get into the S&P, this is going to create that feedback loop, which is going to be extremely positive for Bitcoin and, of course, the price as well.
MicroStrategy seems likely to be inevitably included in the S&P 500. When that day comes, the Bitcoin standard will begin leaking into virtually every person's portfolio. This includes your traditional 401k, your pension fund, and every 60/40 portfolio. MicroStrategy will qualify for inclusion in the S&P 500 once their market cap surpasses about 14.5 billion, and it must remain profitable in its most recent quarter of earnings, along with profitability in the sum of its trailing 4 quarters. This is why Tesla is in the S&P 500, but Coinbase is not. Coinbase is large enough, but unprofitable. This inclusion could create a very positive dynamic feedback loop, as the market automatically would begin sucking the monetary premium out of passive index funds and into Bitcoin, the world's best money, where it truly belongs. The feedback loop is as follows. 1. Investment in passive index funds. This is when money is invested in funds like SPY that track the S&P 500. This is how almost everyone saves for the future now, and it's been happening for decades and accelerating. 2. Increase in MicroStrategy's market value. If MSTR is included in the S&P 500, the passive investments in these index funds may lead to an increase in MSTR's market value. The funds will be forced to market buy MSTR at the current market price to get their mandated allocation. 3. MSTR buys Bitcoin. Using the increased market value, MicroStrategy may decide to issue new shares and use the proceeds to purchase more Bitcoin. This is what it's already been doing on a small scale already. 4. Growth in MSTR's market cap. If the value of Bitcoin increases, as it's objectively the world's best money, so does the value of MicroStrategy's holdings, and this can lead to an increase in MSTR's market capitalization. 5. More passive flows to MSTR. As MSTR's market cap grows, it could become a more significant component of the S&P 500. This means more of the passive index fund's money would automatically flow into MSTR, boosting its stock even further. 6. The cycle continues. This process can repeat itself, creating a feedback loop. More passive investment in index funds leads to a higher MSTR stock value, enabling more Bitcoin purchases, which can increase MSTR's market cap and attract even more passive flows. MSTR being added to the S&P 500, if their market cap continues increasing, reveals the end game very clearly. Bitcoin is going to become a part of virtually everyone's portfolio, whether they know it or not.
So again, if we just have a look at the charts right here, you can see that, as I said in the beginning of the video, the 0.618 Fibonacci was the major breakout, that we had of this falling wedge, right? I showed you guys how to do that. You basically take this, you put it over here. I did that yesterday in yesterday's video, and that's what got us this target. Now, we did have the rejection, but we had some nice support at the 0.5, which is telling us that the next possible area, if Bitcoin was to continue moving to the upside, I mean, you might have a little bit of resistance right here at around 54,000, but ultimately 57,800 is a big level at the 0.786. And as I had showed you guys yesterday, with a short squeeze in mind, the fact that you have $800 million worth of shorts that will be liquidated at that levels, it honestly makes it more likely that you would see some form of a short squeeze to that level. Now, this isn't barring any chance of having a potential pullback. We still know that markets are not just going to go up in straight lines forever. Even the parabolic trend is going to break at some point. That's not bearish. It just means it's going to expand into a larger trend. But, you know, the one thing, if we look at the larger ascending channel, right? So obviously we had, this smaller one down here, right? But if we extend this out a little bit farther, what you end up getting, is something like this right here. So again, now we are seeing the top out of this larger parallel channel. So, this is why obviously it does continue to expand to the upside. But, again, little retracement's okay. And as we said, maybe we retest this wick right here, right, at around that $50,000 area where we had that ETF rejection. And this would be very healthy, obviously, having a correction down to the heart line and then continuing and having that breakout as well. If we do end up falling to some of those lower levels, then again, we have this major trend line looking at support from today, sitting at around 40,000. So could we go all the way down to $40,000? Well, let's have a look down here at what we're seeing. So we started seeing the money flow pouring out right here. And what's happening is now we're seeing it come back in. So what we had right here on the market cipher, which if you guys want, obviously I do have a link for that below. This is a great trading tool if you guys haven't used it. It's probably the industry standard at this point for trading crypto. You could see there was that trigger wave right here. So right there is what was showing us that we had that move. But at the same time now we're having RSI oversold. So I think what you could see is maybe a little bit of a chop. But the next time that we see a trigger wave here, which I mean, I don't really know the math. Maybe it'll be happening sometime in the first week of March. I think that would be an excellent opportunity if you wanted to get back into those longs. Some of the main areas though that we always tend to stay up on these uptrends is obviously the EMA on the daily. So the higher end puts us at around 46 with the low end putting us around 42. So again, if I said, GBTC starts selling, we have these dips, I still don't think we're going to fall lower than this area. And keep in mind, this is going to continue to curve up over time like this, right? So, the longer it takes for us to get down to these levels, the higher that, I don't know why that just did that like that, the higher that, this level is going to be. So the longer it takes us basically to fall, the higher probability that we're not going to go down to those lower levels is basically what I'm saying. And again, looking at the Lux Algo indicator, which I do also, by the way, have links for that if you guys are interested, is still calling for an 81.5%. So basically this right here is just saying that the probability of continuing that trend is still much in the favor of the bulls, right? So I just wanted to get all of that out and let you guys know. But, I mean, yes, I still think there's these possibilities, but, with the diminishing returns, you're also probably going to have these diminishing sort of pullbacks, right? So as we used to see these 40%, 30% pullbacks, I mean, are we going to get those anymore? Maybe now we only get 20%, maybe 25%, you know what I mean? So I think that these dips are going to become fewer and far in between, and it's only going to create more FOMO the faster that it moves, right? So talking really quick about some altcoins, guys. Obviously, everything I talk about, not financial advice on this channel, but some of them that I've been looking at is a lot of the ones that pertain to the AI space, because I do think that AI is going to be a popular narrative, not just in traditional stocks, but also in crypto as well. And, GT Protocol, they have a market cap of about 78.5 million. Fully diluted is a little bit high at around 1.5 billion. But if we go down here, you can see that they only have this, a very low circulating supply. And what it appears that they're doing right now is, ever since the launch, obviously there was this big launch and then this big, pump. It got up here, had a pullback, but it looks like to me it's forming a consolidation pattern between here. So, we're looking for a possible breakout at the end of this. It could go out to potentially, let's see right here, February 18th. 19th, you're looking for that breakout. So that is a possible project to be looking at. Obviously, they're doing blockchain AI execution. You guys can obviously check this out. I'm not here to, shill projects and go into everything. They do have a pitch deck where they talk about what it is that they're doing. They're trying to be the centralized hub, obviously, for all this. They have the retail partner network. And, again, I'm just saying that a lot of these DeFi plays are going to be the plays. Tada is another one. They're doing data collection. They're also using AI, and they say that we have been disappointed with the database available on markets to train our own AI machines. So we believe that AI builders should have better access to higher quality data at a fair price. So again, this is another project dealing with AI, and why this could be an amazing opportunity, again, not financial advice, is because they are only currently on one market, which is the X exchange. So if you wanted to get this, you basically have to be trading with eGold over on Multiverse X, and this is sitting at only a $10.7 million market cap. And again, they're not even on any major exchanges. They're dealing with the AI space. They've already seen a successful launch. You can see right here since launch, it's been, obviously you have your dips, you have your profit takers, some of the early, investors that got into it. But guys, I mean, at this market cap, basically 11 million, fully diluted of 220. This is, in my opinion, not financial advice, an easy 10x. I mean, I don't see how this couldn't do a 10x. So, getting into these cryptos obviously early is where you have the better chances to the upside. And the thing is, you don't have to bet the farm on this. You can go in with 1% of your portfolio, and that 1% can turn to 10% to 100% without a lot of the downside risk, right? And, if you guys, again, were following me, I had posted this about BitsCrunch. So they were doing a NFT free mint, which probably by the time you guys see this they're probably not doing this anymore, but still pay attention to it, because these guys are actually backed by Coinbase. And, again, they are also dealing with AI enhanced decentralized NFT data. So, these are just what I'm looking at here. You can check them out over here. I am following them. They're also backed by Polygon and Chainlink, which is pretty interesting as well. So they may be doing well, and they haven't even launched yet. So that's another one to keep an eye on. If you guys want, again, go follow me over on, Twitter, for all of that. And friendly reminder, guys, if you are trading on Apex, don't forget about the $15,000 ES Apex bonus. If you're interested, you can check that link below in the description. So I know I breezed over it kind of quick. Again, this isn't really a channel where I want to shill altcoins. It's not really my thing. I don't really care, if you guys buy it or don't. But these are the opportunities. And the two main spaces that I think are going to do the best in this upcoming run are obviously, there's always going to be the utility, the old school, like, Chainlink is probably going to do well, things like that. Established cryptos, they're much higher. And then some of the lower caps that you want to be looking into, the mid caps, the more speculative ones, the ones where you can make the big gains, 1%, 2%, 3% max. But the field that I'm looking at is AI and gaming. That's where I'm looking. I'm looking at crypto gaming and I'm looking at crypto AI. I think those are going to be the hot sectors in this bull run. I mean, of course, there's going to be a flavor of the week, flavor of the month. We'll talk about that. But I think AI plays and I think blockchain gaming plays are going to be, is anything really safe? Everything's a speculative play, but I think that's where you're going to see a lot of the attention for this upcoming run in the altcoin. So that's it for me, guys. Thank you so much for coming back to the channel. Hope you're having a great day today. Again, if you do want to learn how to trade, check out the tutorials popping up right here, right now. Hope you guys have an awesome weekend. Definitely go follow me over on X. I've been posting a lot over there. So until next time, guys, stay crypto. And of course, peace out.